Hi, everyone, and welcome to today's webinar. I'm Ashley, and I'll be your host. Our webinar today is on the 5 toughest areas of tax compliance and how to manage them. And today we'll be covering legislative changes, exemption certificates, drop shipping, audit readiness, and getting ready to expand internationally. But before we hop into today's content, I do have a few housekeeping items to cover. So just a friendly reminder that Avalara cannot provide legal tax advice, but we will answer your questions as best we can. On your screen is our safe harbor policy. Please take a moment to review that while I continue with some additional housekeeping. We are recording today's event, so if you want to listen to it again or share it with a colleague, you'll receive the recording later today. The console you're looking at can be customized, so feel free to resize and move the windows around. The additional resources section contains related resources. So if you'd like to check anything out, go ahead and open them now, as this console will automatically close at the end of the webinar. Under the additional resources, you'll also see a link to today's slide deck. If you have any questions, you could submit them using the Ask a Question box. We will answer as many questions as possible at the Q&A time at the end of the presentation. You can also submit any troubleshooting questions you have in that Ask a Question box. Now, along the bottom of your screen, there is an icon with little chat bubbles, and that is for our group chat. So if you click that, it'll pop up on your window, and we encourage you to introduce yourself and chat about today's content. As an icebreaker, we can put in where we are calling in from today. So I'm calling in from the Midwest. So you can drop in the group chat where you're calling in from today. If you have any technical issues, there is a question mark icon box at the bottom of your screen, or you can reach out using that Ask a Question box. We are offering 1 CPE credit for today's webinar. For those looking to receive CPE credit, please note that we will ask you to respond to 3 of our 4 poll questions. The poll questions will pop up on your screen for a limited amount of time, so please make sure you're ready to answer them when it appears. Please don't split or tile windows on your computer screen, as this can affect the placement of the poll question and you might not see it. You must also attend the full 60-minute duration to qualify for credit. Once you have met the CPE requirements, your certificate will be available to download in the Earn Certification box on your screen. You can click the icon to access it, and it will open in a new tab. Your certificate will also be sent in the post-event email that you'll receive later today. Unfortunately, we can't provide CPE credit to those who have technology issues that prevent them from qualifying. So if you have any issues today, please reach out in the Ask a Question box as soon as possible so we can help you out. And lastly, if you have a moment, you can respond to our survey questions on your screen or following the webinar. So now let's meet today's presenter. We are joined by Aaron Hill. Aaron is a Senior Solution Engineer at Avalara. Aaron, welcome. Can you take a moment to introduce yourself?
Hey, thank you, Ashley, and welcome, everybody. Aaron Hill, Senior Solutions Engineer here with Avalara. My primary role here is to assist our sales staff with positioning the right products and services to assist our customers and create the most value for them via automation and tax compliance expertise. Been in the industry actually, I think over 20 years by now. I think some of the background information you see there is still applicable. Very happy to be here today, excited to answer your questions and share a little bit about what we've been up to here at Avalara.
Great, thank you, Aaron. And before I pass it over, we do have our first CPE question. So you should see that on your screen now. The question is, what is most challenging for your company? And you can select all that apply. So legislative changes, exemption certificates, drop shipping, audit readiness, or international sales and taxes. So make your selection and hit the submit button to respond to this CPE poll question. And as you'll see, this is the format for our presentation today. So we'll share the results in a moment once everyone has had a chance to respond. But Aaron and I can see the results rolling in. Aaron, are there any surprises, it looks pretty evenly split. Oh, I think you're on mute, Aaron.
So yeah, apologies. It does look pretty evenly split. The drop shipping is maybe a little bit higher than I kind of anticipated, but it's not surprising in of itself. Audit readiness, I would expect it to be a little bit higher, actually.
Perfect. Well, I think everyone has had a chance to respond, so I'll go ahead and share those results with everyone. And the audience can take a moment to look at those, and I will advance us to our agenda slide. And Aaron, I'll hand it over to you and you can take it away until our next CPE question.
Okay, thank you, Ashley. So this is what we're going to talk about today, everyone. Legislative changes, and those are of paramount importance. We're going to talk about exemption certificates, what we see out there in the real world, kind of how we can enhance those situations for our customers, and things that we want all of our customers and everybody out there who's required to collect certificates of things they should be thinking about. Drop shipping, is one of those poll questions. We're going to talk a little bit about that, the different roles and responsibilities depending on if you're a manufacturer, a seller, or the end consumer. Audit readiness, some of the things we want our customers to be able to be aware of as they prepare to maybe face an audit. And then some exciting things with international sales and taxes that we've been involved in, and ever increasing our profile in that space as well. So let's get started. So legislative changes is going to be first. And as we talk about legislative changes, what we really want to talk about, let's talk about with economic nexus. So we all remember Wayfair back in 2017, and on the heels of that, Wayfair versus South Dakota, the state of South Dakota won, and this whole idea of economic nexus came into being for the first time. And again, that was 2017, and since then, of course, and very expectedly, the other states have kind of gotten on board with economic nexus, all with their own sort of spin on it, right? So when you think about economic nexus, not everybody modeled South Dakota, but they stayed close to that model since it withstood Supreme Court challenge already. What you'll see is varying thresholds in terms of the sales amounts, and also transaction volumes where if one or more of those, one or the other apply exclusively. You'll also see things like, do marketplaces come into marketplace sales affect your economic nexus? And we'll talk a little bit about that coming up as well. And then how we can help manage those things as well. So for example, you can see Connecticut's threshold gross receipts of $100,000 and $200 retail transactions. New York's a little bit different, 500,000 and 100 transactions. So what those essentially mean is as you meet those thresholds, or as you approach those thresholds, what are you going to do about it as a business? And the idea of it is the business should be taking a look at how those things work. So again, so this map here, this economic nexus by state, you can see the different takes on how the different states are handling economic nexus, right? You can see, a state like Minnesota, $100,000, 200 transactions. That's exactly the same model as South Dakota, that sort of thing, as I mentioned before. The idea of it is, again, as you start approaching these thresholds, what are you going to do about it as a business in terms of being prepared to get registered in those states? And we'll talk a little bit about that. Now, what's included in economic nexus thresholds? Essentially, at its simplest, there's three things that are included in economic nexus thresholds. It is your sales, your exempt sales, and marketplace sales. It's really kind of those three primary categories that they get walked through here. And so you can see the United States of America here in this map, wildly different approaches to economic nexus thresholds. You can see categories such as gross sales, including sales made through a marketplace, gross sales excluding marketplaces, those sorts of things. So we went down the list there. There's a handful of states, not having to be those nomad states, where it's not defined or no sales tax, right? So, and Oregon doesn't have an economic nexus law because they don't have a sales tax law, so it would naturally follow. We have retail sales, including sales made through marketplace. And we say marketplaces, those are sales that we're making through the Amazons and the eBays and Etsy's and those sorts of platforms where you're presenting your merchandise to do those sales on those other platforms. And so not only can those sales affect economic nexus considerations, but also your responsibilities in terms of sales tax compliance and registration, that sort of thing as well. So, in talking about marketplaces, the responsibility to collect and remit sales tax lies with the marketplace facilitator. So for our customers out there today who are selling through an Amazon, who are selling through an eBay as part or all of their business, there are 45 states plus Washington, D.C., Puerto Rico, where those marketplace facilitators have to file that sales tax on behalf of the sellers of the marketplace. Now, in addition to that, these jurisdictions are also basically saying, for the most part, you can see on the next slide coming up, we'll talk about it, but even as the seller through the marketplace, even though the marketplace is requiring or is required to remit that sales tax, you still have to report it to those states where those laws are in play. And we'll look at that on the next slide here. All right. So states where, as a marketplace seller, in this example, exclusive for marketplace sellers, what are your requirements? You can see some are required to register and file with the state, right? Not required to register and file, right? And that's these like light gray slides here. These light gray states, they may look white on your end, I'm not sure. But those states are basically, hey, if you're selling through marketplace, they're handling it. If all you're doing is marketplace business in our state, we're not going to require you to file anything. Of course, if you're doing other sales in other channels outside of that marketplace, then you would still be responsible for those types of sales and reporting as well. Okay. Required to register, required to file returns at the state only if the seller has inventory in the state, right? So as that remote seller selling through a marketplace, if you're maintaining inventory in that state, then you would be required to file. Now, when it comes to inventory, you also want to make sure you're considering if you're doing Amazon sales and you're doing fulfillment by Amazon where they're housing your inventory, that can be a nexus triggering event most places as well, and then leads further into these criteria that we're talking about here. And then, of course, we have those handful of states, still those nomad states, as we like to call them, where there are no sales tax requirements and where there, by extension, no rules governing those marketplace sales in those states either, because there's no responsibility to collect sales taxes. Now, streamlined sales tax. Sure, many of you are familiar with streamlined sales tax. And as a part of streamlined sales tax, what the member states have done, I think there's like 24, 25, 26 of these states, is the whole idea of streamlined sales tax is simplifying the rules behind sales tax legislation, sales tax collection, sales tax payments, right? And so what these states did is they got together and they said, let's make it easy. And by easy, they did things like rate simplification, basic rate for remote sellers at the state, and maybe one additional rate as you see here. Remove the responsibility for having caps and thresholds like the Florida discretionary sales tax law, which is that $5,000 threshold, or the sales thresholds in a Tennessee that alter between the state and local levels every $1,600. Can get very complicated in terms of being able to be, compliant. That's the word I'm looking for. Uniform treatment of sales tax holidays. Now, when you think about a sales tax holiday, that's an event that's imposed by the state, and it's a sales tax relief activity, as hopefully most of us are aware, who are so entitled to that relief as the seller. Now, the uniform treatment of these sales tax holidays really get into the items that are going to be included in the sales tax holidays, duration of sales tax holidays, notification of when these holidays are going to occur, that sort of thing. Drop shipping, interesting topic. We'll talk a lot about drop shipping coming up here, but uniform drop shipping rules. So when you think about drop shipping, it's going to always be a seller, a supplier, and an end customer. And so what the SST program has done is basically simplify the requirements, because when you think about if I'm the seller and you're my customer and I'm shipping via a third party, well, there's really two transactions happening. We're going to really dig into this on later slides here. But essentially, because there's really two transactions in one that are occurring, it gets into exemption certificate management and the requirement for collecting certificates between the three parties so everybody stays compliant. And then also simplify tax returns as well. Now, we're not really talking about it here, but as a CSP, and we'll talk about the CSP, but there is a qualification stage. And when you're interested in becoming a member of the Streamlined Sales Tax via a certified service provider like Avalara, there's some simple requirements we're going to walk you through. Those simple requirements are designed to, based upon your transaction volumes and business by state in those SST member states, do you qualify? Now, very early in the Streamlined Sales Tax program, it was you registered for all the states that were member states of Streamlined Sales Tax. Today, that's not the case. Today, you're registering only for the states within the Streamlined Sales Tax member states that are meaningful for you, whether it's because you do meaningful business there, they're the only ones you can qualify for based upon the qualifications. But it's a little more flexible in that regard, I would say. Now, as a certified solution provider, here's what Avalara is providing to our customers. Free registration services for the states where you qualify in those 25 member states. We're going to do free tax calculations for you using the Avalara platform. You're going to get free returns filing from Avalara as well. And also you're going to get audit protection. So for our customers who are Streamlined Sales Tax members, if you get audited in a Streamlined Sales Tax state where we are your certified service provider, we will support the audit process with you. And the last piece, and it's really one of the most important parts of it really, is the unified definitions and rules. We make it simple for people to understand the requirements in those states and to be compliant via the CSP program. Exemption certificate management. So when I think exemption certificate, there's really a lot of pieces to exemption certificates. It is the collection of the certificates, but then what happens after the collection of the certificate, right? Now, managing incoming compliance documents while minimizing audit risk, right? And so in my career, what I've learned, I think, is that those certificates become really important when that auditor walks through the door, right? That's when they really become important. Prior to that, their importance can be minimized at times. And I think that that's probably a wrong way to look at certificates. So let's talk about really what we should be doing with exemptions. So with exemptions, right, what we really want to do is be able to know what we have and be able to leverage it during the tax calculation process for our customers who have provided those exemption certificates. So of course we want to collect them. And so as a matter of process, we take a kind of a couple multi-pronged approach to that, right? As a new member to leveraging our exemption certificate capabilities and services and products, we would probably do an initial what I like to call a gap analysis, where we would collect all of your current information, whether it's all of your customers and the jurisdictions and the rules they believe they're governed by in terms of their exemptions. Are they resale? Are they manufacturing? Are they government? Do they issue a direct pay permit because they just want to figure it out for themselves after the fact? But then we're also collecting those documents, okay? And once we've collected those documents, we can store them in an easy to retrieve, identify, access, and retrieve very quickly, which is very valuable when an auditor comes in and says, I need to see the exemption certificate that applied to this transaction, because we also, and I'll get to that in a second down at the reports to help with that. Now, once we store them, we want to be able to track them, right? We want to be able to track the customers who have responded to our requests for new certificates. We want to be able to follow up with the ones who haven't responded in a timely way. And the idea of it is to get those certificates into the system so that we can leverage them as a part of the invoicing process before they expire or before they get identified as a bad document. So we're not doing exemptions against that. The report is really that. So within our tools, and what we should all be doing is saying to ourselves, hey, do I know how to find the documents that I need that are associated with whatever transactions may get pulled, so that I'm prepared, right, when those events happen with that auditor sitting in the chair next to me. So within our tools, a variety of reports to help, one, just see your certificates out there in whatever state of compliance they happen to be in, but also attach those certificates or associate those certificates with the transactions where they were applied. Analyze, we want to make sure we have good documents, right? And so as part of our services, using even technology like OCR technology, as we collect those certificates, we're analyzing them to make sure that they're quality documents. Is it the right document? Is it filled out appropriately? Does it have a valid signature on it? Is it, you know, is the document referencing the right buyer? Is it referencing the right seller, right? Maybe they sent us a certificate that they used previously for something else, that sort of thing. Utilize is the process by real time during invoicing. Our technology looks at those certificates and says, at the time of this sales order, at the time of this invoice, is my document valid? Will my document stand up to audit if I apply to this transaction? And that goal is that we want that answer to be true all the time. That is really the goal. That's what Utilize is all about. Now there's some things, in addition to just that process, in terms of how we want to go out into the world with exemption certificates, and some things you should be thinking about as a customer. And we'll talk about those on the next slide. But the whole idea of it is we want to reduce risk of exposure. We want to streamline management across the whole document lifecycle, as I just articulated here. And we want to be able to apply our technology to your business using our APIs and business applications. So what kind of things should you be talking about when you think about exemptions? How many states are you, or do you need to register in for sales tax compliance? And why is that the first question here? Because if you're not registered in a state, you don't, by law, have to collect exemption certificates from your buyers in that state. A lot of businesses do, simply because if they ever begin to register in that state, they've already begun collecting those certificates. And that's really just a business decision there. Most of my customers exempt. If they are, well, I'm going to place a higher value on collecting those exemption certificates. On the other side of the coin, if very few of my customers are exempt, maybe I tend to not pay enough attention to those transactions, where maybe I should. What is your process to collect and update those documents as they age off over time? Do you have a plan? What does your onboarding process look like for that new customer that wants to be exempt for the first time? That unknown buyer, and he's new to your relationship. What does that customer experience look like? Is it over the phone? Is it automated via applications? That sort of thing. Our salespeople in the field collecting those certificates. So these are a lot of things we want to think about, and depending upon how you operate, there's certainly ways to automate those things and streamline them. Now, the biggest piece to me is how scalable is your process, especially for those customers of ours whose operations and interactions with their customers are very heavily leaning towards the primarily exempt type businesses, right? How scalable is what you're doing today as that grows a certificate population from maybe 500 to 5,000 to even 15,000 or more certificates? Do your current processes allow for that type of growth over time? Your B2B experience with your B2B customers, obviously, who have those certificates, right? What is that user experience like? So within our suite of tools and products, we can help really improve your online B2B capabilities with tools that can go into a shopping cart, with tools that can go into customer profile applications within B2B websites to collect those certificates right there during the sale process, or as a part of that customer profile component that we see in a lot of websites today. So a lot of things that we can do there. Even retail at the point of sale, we have solutions for that as well to help make sure that, that person, when I go to Sam's Club or I go to Costco, as I'm going through the checkout line and that person's in front of us, how do we quickly get that person through the line to maintain your level of service for your buyers? Again, the quality of documents, Can you afford to delay sales while you're trying to review those documents if that's part of your process? And do you even have the right tax compliance expertise to ensure what is a good document? What does a good document look like, right? I kind of mentioned it before. Is it filled out correctly? Does it have the right seller, the right purchaser on it? Is it the right document, right? Is it a direct pay permit when it should have been a resale certificate, right? Or is it maybe a business license that they sent over because they didn't understand the question even, right? So we want to make sure that you're thinking about all these things. And then as you come to clarity on those things, then you're prepared to act. Now, in terms of acting, for Avalara and how we help our customers, that begins with Avalara exemption certificate management. We're speaking specifically to Pro here, but depending upon your needs, there are varying levels of capability here, but Pro seems to meet the sweet spot for most of our customers. For participants today who are familiar with cert capture, potentially, ECM Pro and ECM Premium are really just re-imaging and reimagining of what cert capture provided in terms of functionality. What we were able to do is just streamline it, make it lighter footprint, easier to use, easier to find different features. And so the front-end user experience is very straightforward, right? It's a simplified user interface integrated with the Avalara platform. It allows you to see your customers, each customer's individual certificates on a simple page, and then take direct action on whether or not you need to collect certificates either individually or at scale, as we were talking about before. As certificates come in, we employ optical character recognition, OCR, to review those documents, and that's fortified with human capital as well. That human capital is just going to double check some things or just make sure, that it's compliant. Because again, we look at certificates, when that order comes in the door, that's when they matter. And essentially, we take the position that certificates are money, essentially, for our customers. Now, automated tax ID validation. This is kind of a handy tool that we've been able to integrate into our platform. And what we're doing is that tax ID, we can bounce it off the Department of Revenue website and confirm its validity. And then subsequently, the certificates behind it as well. Okay. Now, we've also integrated on a resources feature in the tool, and it's actually pretty cool. Standard tax law, questions we get all the time. And what's nice about it is we respond in just common language. So the intent of what's being communicated isn't diluted or misunderstood. There are resources for certificate libraries by state, tax legislation by state and by certificate type, different types of industries and what specific exemption management and exemption categories you should be considering based upon if you're a manufacturer, a retailer, or a nonprofit, those sorts of things. The backend platform, in your Avatax account, you're going to see, again, the forms that we support. We can add some certs as well. It's completely integrated with Avatax, right? So it's right there on that same dashboard for us. And there's no data migration necessary for our customers who were previously using Avatax exemptions or cert capture, as I mentioned previously. Now, from a risk and security standpoint, we were SOC 2 compliant, Type 1 and Type 2, and we're using Avalara Identity, and SSO is on the way. So I think we're at our next poll question.
Great. Thanks, Aaron. I will launch that. You should see that on your screen now. So the next poll question is, how long have you been an Avalara customer? So less than 2 years, 3 to 4 years, more than 5 years, or maybe you're not yet a customer, just here to learn some more. So as a reminder for those wanting to receive CPE credit today, you need to answer 3 of these 4 poll questions and attend at least 50 minutes of today's webinar. So select your answer, hit submit, and we will move on to the next section. Over to you, Aaron.
Thank you, Ashley. And I'm kind of reading through some of the questions as we're going here. And There's a question here directly related to drop shipping, so hopefully I'm able to just answer it here. If not, certainly we can follow up during the question and answer portion later. So when we think drop shipping, I kind of got into it earlier. Drop shipping is really a situation where there are three parties in the transaction. There's the manufacturer, the third party, the one actually providing the goods. There's the retailer or the vendor, the seller, and then there's the customer who's going to receive those goods. Now, with drop shipping, it gets into, because of just the basic nature of drop shipping, as this slide explains, it's really two transactions, right? And really what's happening is, as the retailer, I'm selling something to the customer, then I'm asking the manufacturer to fulfill it directly to the customer, right? Now, I guess that just made more sense than having the manufacturer ship it to the seller, just for the seller to turn around and reship it to the customer, right? Save a little time, a little bit of headache on folks. But because of the way tax laws and tax requirements work, this can get a little interesting, right? So the retailer is going to sell to the customer. And depending upon nexus, maybe the retailer doesn't have nexus where the customer is located, okay? So if the retailer didn't have nexus, what's going to happen? The retailer is not going to charge that customer sales tax, regardless of what the customer intends to do with those goods. Now, the retailer is going to have to buy those items from the manufacturer, right? They got to get it from the manufacturer, and they're going to give that manufacturer that resale certificate because they're going to turn around and resell it. Now, if the retailer is not registered in the state where the customer is, well, the retailer may or may not have that exemption certificate to provide to the vendor, to the manufacturer, right? Now, the manufacturer, in shipping to the customer, right, is certainly, if they have nexus in the same state, then there's some sales tax responsibility there. Let's talk a little bit about what that might look like. So, drop shipping. Just because you're shipping doesn't mean you're drop shipping from a tax perspective. So in that scenario we just talked about, if the sale to the customer, between the retailer and the customer, call that sale one. If sale one occurs without sale two, there's no drop shipping, right? There's no manufacturer involved in that transaction. And it's just going to boil down to nexus, customer status, and then the taxability of the goods, potentially. And by customer status, I mean, is that customer exempt with a valid exemption certificate on file or not? Now, sale two, if that sale occurs without sale one, second scenario down here, there is drop shipping, normal rules apply. Now, that sale two, yeah, it's drop shipping, but you might consider it delayed drop shipping, because if that sale one isn't occurring immediately, right, we can make that sale. We got to have that conversation about, are we going to inventory those items that we purchased for later resale, or is it some other situation going on there? Now, let's look at an example. The customer is in Illinois and they place an order, right? We contact the third-party drop shipper who's also in Illinois, okay? Now, that means both the customer and the manufacturer are both in Illinois. They both have nexus there. Both of them have sales tax responsibilities in one form or another, right? Now, we're an Ohio retailer. We're not registered in Illinois, so we really don't have any sales tax responsibility. Now, because I don't have any sales tax responsibility in Illinois as the seller, as the retailer, I may not have a resale certificate for Illinois to provide to that Illinois manufacturer, right? And he's going to want that resale certificate, okay? And I'm not going to have it because, I'm not registered in Illinois. I don't have a resale certificate for the state of Illinois, right? So the drop shipper is going to charge us sales tax in the absence of that exemption certificate, right? We're going to charge our customer, but we're not going to calculate sales tax since we have not met that stage threshold. Who's on the hook for the sales tax? Well, because we're dealing with two sales, one between the retailer, one between the customer, a sale between the retailer and the manufacturer, The sales tax would depend on who and how the items are being used in cell 1 and cell 2, right? And so the answer is pretty much it depends. I think it's really the answer in terms of who's responsible for the sales tax. Now, it might be that, one of the three parties is responsible for even a use tax accrual, right? So, for example, I'm not registered in Illinois. I sell to the customer. The customer's not paying any sales tax, but sales tax is due. So the customer would have to do a use tax self-assessment in that situation, for example. But it's possible if everybody has exempt certificates, like, for example, right? You know, if the appropriate certificates were able to be provided, then everything would kind of work itself out. But that's not really what the point of this particular use case is. This particular use case, more than likely, there's going to be a use tax responsibility on the customer. Now, in my career, I've even seen in this scenario where the customer, if it's an important enough customer, will request that the retailer go ahead and get registered in Illinois so that the Illinois customer doesn't have to do that use tax accrual. And I've seen that out there as well. And if it's an important enough customer, I've actually seen it happen. So it's really about, if that customer is important enough, what are you going to do as a business, as that retailer, to stay in the good graces of that customer? Now, as I mentioned earlier, there's really three perspectives, point of views, I guess, is POV: the manufacturer, the retailer, and the customer. And they all, at the same time, when they have to work together, they're all very selfishly have their own concerns at heart as well, right? And so if I'm the manufacturer, I want to make sure I'm getting my exemption certificates from my purchaser, right? From my distributor, from my wholesaler. I got to get that exemption certificate. If not, I'm charging sales tax, right? So double check. Do you have policies in place for your customer care, right? And a lot of that is that onboarding of that new customer, getting those certificates and maintaining them. Do you have the ability to guide your client to find out the proper exemption certificate? Can you contact your client's customer for information? So those are some of the things you maybe want to look at. As the retailer, you want to be able to say, why am I being taxed, right? Because as a retailer, right, I've got to be able to provide that exemption certificate to the manufacturer, right? Otherwise, they're going to charge me sales tax. And I'm not going to like that very much. So are you comfortable with your nexus analysis, and are you registered in all the right places so you can collect the appropriate certificates based upon where you do have tax responsibilities? Do you understand that your customer is going to consume those and treating that customer sale appropriately, right? If I'm buying consumables as that customer, right, then I've got to be able to provide documentation that says, hey, I'm just consuming these things, I'm going to charge tax. If I'm buying things for an allowable exemption, then I've got to be able to document that with an exemption certificate. And then what do you know about your supplier, right? Are you applying the customer point of view, essentially? Now, the customer point of view is essentially, hey, I'm buying it. If I buy from an out-of-state wholesaler, I do not owe taxes. Well, maybe, I think is really the answer there, right? A couple years ago, states like Colorado essentially kind of went on the record with, legislation to say, if you're not charging your customer sales tax and you're not collecting the documentation as to why not, we're going to go after the customers for use tax, right? And I think with how Wayfair is playing out, a lot of those requirements are kind of, solving themselves, right? But there was a time that was absolutely the case. If the customer wasn't paying sales tax, somebody better be able to account for it. Is really kind of the bottom line there. And so, do you know how their customer's does the customer know how they're using things, right? Something that can get really sticky is if you buy the same item but for different purposes, right? I buy computers. Some of the computers are running my manufacturing process with automation. Some of my computers are sitting on desktops all over the country with sales tax requirements. And how do you handle those types of purchases in your system and only apply those exemptions for the appropriate use within the manufacturing process, for that example? And if they're going to be further resold, et cetera, et cetera. So you really have to make sure that regardless of the perspective that you're in, any of these three perspectives, that you understand the requirements from a just sales tax compliance perspective of what's in your best interest, but also the information you need to be able to collect and share with the other parties for your best interest in these transactions. So with that, I think we're coming up on another poll question.
Yes, it is time for the third CPE poll question. You should see that on your screen now. So the third question is, how automated are your tax process and technologies? So there's a scale, 1 through 5, 5 being you've automated everything you can, and 1 being almost nothing is automated. So you can make your selection and hit submit for this third CPE poll question. And I will advance us to the audit section. So Aaron, back to you.
Hey, Ashley, thank you. So audit readiness. It's essentially exactly that. When you get audited, what are the things that you've been thinking about as you prepare for audit? And by and large, the biggest piece of anything we talk about today is nexus or registration status if you're thinking globally. But essentially, there's multiple types of nexus, really what we're talking about here, right? And so what we have, physical nexus, and that's the traditional nexus back from, the manufacturing days of the United States, where physical presence was the rule of the land, right? If you have an office, if you have employees, inventory, independent contractors, those 1099 resources, those sorts of things. Economic nexus, the whole Wayfair thing with the thresholds. Click-through nexus, if you're advertising on websites, and those websites have nexus particular places, a lot of states will say that's a nexus triggering event for you as well. Affiliate nexus, and that's relationship-based, right? We used to see a lot of affiliate nexus very early on in online retailing, where a particular retailer, that's brick and mortar, would create a separate legal entity specific to their online businesses. And the presumption there was that they would save just overhead and sales tax collection because it's a separate legal entity with its own nexus in theory. What states really quickly began to do is say, hey, that's affiliate nexus. Widgets Inc. online is affiliated with Widgets Inc., right? It's really the same business, regardless of registration status. And then the marketplace nexus, again, by state. A lot of states say, hey, if you're selling through a marketplace in the state, that's a nexus triggering event for you as well, right? Even if you don't do any sales outside of that, you're still creating nexus. And a lot about what is nexus triggering activity is really designed, even if it's not a sales tax responsibility, it's really going to open up the door for auditors to go in and look at businesses from other verticals of tax compliance, right? Income tax, payroll tax, just whatever, right? And so that's really where the whole nexus piece comes into play. So if you're wondering why, if you sell into a state and everything's exempt, why do you need to register? Well, the state wants you to register so you're on their radar so they can look at you for other stuff. Let's take a look at different types of physical nexus creating activities. Payroll, multi-state locations, warehouses, on-site field service and repair, right? That truck pulls up to do something, it's got a company logo on it. Hey, that's nexus triggering. Delivery by company vehicle. If that's not on here, it should be. Delivering a company-owned vehicle. There's a story. Furniture manufacturer in Oregon, was selling into the Washington state area. And since Oregon has no sales tax, they weren't collecting any sales tax. But those company vehicles going into the state of Washington was triggering nexus, right? And the company wasn't really addressing it. Under audit, long story short, they really got treated poorly. Tons of assessments, liability, and eventually that mattress company went out of business just because of the inability to be compliant in that regard. Installation training, do you own lease personal property? Field sales service staff, right? Those guys with the company shirt showing up somewhere to sell or service stuff. Another example, a client I worked with many years ago basically got into an audit situation with the state of Illinois. And it was going so poorly that particular customer of ours literally just shut down anything that could even remotely be construed as nexus in the state of Illinois, up to and including they didn't even want their employees checking email. They're just passing through the airport like O'Hare or the other airport there in Chicago. So these things are all very real, right? The inventory maintenance, franchises, your salespeople going, doing conferences. Literally, some states have long lists, 15, 20 things, very specific that say, if you've done any of these 15 things, Arizona is a good example of that. You have nexus, and you should probably do something about it. Some states list a little bit shorter. I think the point of it is that for where you're selling into, you really want to be able to understand and apply what you understand about the things that you're doing, how it impacts nexus, and then based upon your particular risk tolerance, are we going to register or not? I had a customer, this is my last customer example. They were based, I think, in Israel, and they were selling into the United States, and they were basically just saying, we're going to wait for them to come after us. We're not going to register. We're in Israel. They're not going to afford to come after us. And then those types of activities what predicated, like I mentioned before, Departments of Revenue going after the buyer instead of the seller. And you don't want your buyer, getting audited because you didn't charge sales tax. So just a lot of things out there. But the basic bottom line of it is understand what you're doing. That could be nexus creating activities specific to the rules of particular jurisdictions. And those are things we can also help you understand through our products and services. Audit triggers. And I've kind of been talking about this the whole time. Nexus discovery, having nexus and not being registered. I kind of mentioned this, payroll tax, other state or local tax filing, information sharing. Trickle-down referrals. This is a sneaky one, right? One of your buyers gets audited for whatever reasons of their own, and the auditor goes, well, hey, let's go get this seller because, you do a lot of business with the seller. Maybe they have a huge presence in the state, and that's really kind of a big one. And then public information, what is your visible footprint out there in space in the real world that may get an auditor's attention? Kind of like that mattress delivery truck going back and forth between Oregon and Washington all the time, and this auditor just happens to just be sitting at a coffee shop near the border and just witnesses this every day for months. Industry-based leads. And then also, and we talked a little bit about this, the whole Amazon question, right? If you're selling through Amazon, a lot of states are going to consider that nexus. And they're going to say, hey, let's take a look not only what you did through Amazon, but everything else you're doing in the state, other channels, other sales channels, other types of things that you're doing as well. Okay. How are we doing on time, Ashley? Tax tips and tricks. Tax is not paid on an honor system. And it's true, right? An auditor's not going to come in and go, well, I get it. This stuff is hard. You did your best. Okay, we'll just clean it up and do better next time. That's not how it works. Auditors used to be okay with due diligence, right? But now it's centralized on proof. It's not so much due diligence, and I tried really hard to get this right. It really is more of, you know what, you got to be able to prove it. So when you get contacted, if you were unfortunate to get contacted, you got to get on top of it, right? You don't want to ignore it. You want to respond timely. Don't rely on statutes of limitations because they won't apply typically in states where you haven't registered. If you've been registered in a state for like 20 years, there's look-back periods. They can't go back 20 years. They can go back 3, 5, 7 years, that sort of thing. Where are your records? Where are your books? Be prepared. Have a meeting with the auditor to begin the audit process. Be respectful. You have to manage the audit and the auditor. You can't be too nice. You can't be too mean. And only answer questions on a need-to-know basis. Don't just start running off at the proverbial mouth and getting maybe more information out there than necessary. Because you do have rights as a taxpayer as well, right? Get everything in writing, right? Track deadlines, complete the audit, audit finding and draft schedules. You may even be able to appeal. Nothing is final, as we've learned, because auditors will come and come and come and come and come until they decide there's no more fruit on the tree. Now, all of this to say, through the life cycle of sales tax compliance, right, Avalara is here to support you through all of those things, right? Whether it's pre-registration activities with nexus studies and voluntary disclosures and risk assessments, they're under the nexus study one there. The licensing, where we can help you register. We can also help you with your business licenses, right? Your license management as well for a lot of our brick and mortar customers out there. Calculation of the sales tax. Avatax is going to be able to calculate your sales tax very accurately using industry leading technology to just get it right. Exemption commands, we talked a lot about that. It's going to handle that straight buyer-seller relationship. It's also very integral to those drop shipping scenarios as well. And then the returns filing, where we are capable of not only doing your filings, but making the payments as well. International sales and taxation. So the United States has sales tax. The rest of the world either has VAT or GST. We're going to talk about that. The whole question of GST is essentially Canada and India. We're going to talk about that. The EU, which is where the lion's share of international commerce is centered. Now, the interesting thing about VAT is very different. VAT is kind of a progressive scheme where at every exchange, there's a VAT assessment, whether it's between the manufacturer and the distributor and the retailer, and the retailer and the customer. And there's really two types of VAT, input VAT and output VAT. And so as you go down through the scheme, we're at each stage assessing your input VAT, and if you're reselling stuff, your output VAT, and if you're entitled to any sort of VAT recovery on that input VAT, right? And 150 countries minimum are doing VAT calculations. And a lot of our Avalara customers, and we'll see this here in a second, sell in at least 2 countries. So let's keep moving. So the next big thing, for fraud reasons, a lot of countries, and it's really started kind of as a Central America thing and South America thing because of fraud, where there's this requirement that was called e-invoicing. What e-invoicing essentially is that as you invoice your customer, you have to send a copy of that invoice electronically to the taxing authority. The taxing authority reviews it, and they either are going to send it back to you, approved, to send to your customer with approval, or they're going to approve it and send it directly to your customer on your behalf. Okay. As our customers here at Avalara are getting more entrenched in, global sales, right? We're prepared to help them obviously attack these requirements where you see 80 countries have some form of e-invoicing. But it's going to turn into a project initially, right? So what we did was we acquired some technology, we integrated it into our systems, and it's accessible either as a standalone product or it can even be leveraged using simple APIs, similar to our other APIs in our portfolio. But essentially, like I mentioned, it's going to be a project. It's going to be a full life cycle. You're going to have stakeholders on your side. You're going to have stakeholders that understand what the requirements for e-invoicing are based upon the countries you're in, so that you know what your outputs are supposed to look like. Of course, we're going to help with all that. You're going to have a REST API developer probably. Love REST API here because it's easy. And you're going to have sponsors, of course, on your project. You're even going to have user experience people depending upon the platform you're integrating this into. Okay? But essentially, the whole idea of it is as a part of that invoicing platform, as I mentioned before, we're going to prepare and transmit an e-invoice based on the schedule for the country, right? Some countries are saying, hey, we need it in the next couple of days. Others at different periods throughout the month. So that's kind of just depending how it's going to go. And again, as I mentioned, the whole point of e-invoicing is those departments of revenue are going to get those e-invoices, review them for fraud and compliance, and then either send them forwarded on to your buyer on your behalf or return it back to you so then you can send that reviewed and approved e-invoice from your ERP to your customer. Now, the next component of global sales is really if you're selling physical goods, the whole question of cross-border tax complexity. Now, cross-border is really we're assessing the whole idea of duties if you're going through customs. We quickly look at some of these: shipments delayed, added supply chain costs, accurately calculated international duties. The whole idea of it is that duties for a long time were unknown for buyers, right? I buy some stuff online, it gets shipped from France back to me here in the States, and it sits in customs waiting for someone to pay the duty. UPS calls me and says, well, yeah, I know your merchandise is only $25, but the duty on top of it's going to be $100, right? And then I'm sitting there, instead of $25, it's now $125, and I might just say forget it altogether. And now there's these abandoned goods sitting at customs that somebody has to do something with. So the whole idea is to get in front of that real world use case and allow our customers to account for it up front. So what we've been able to do is in these orange bars here, we've solved those, right? Using our technology, where in a shopping cart or in ERPs, we can say, hey, based upon what's in here on this transaction, we can calculate that duty, right? And we can collect that duty up front. You have that money, so when your shipper bills you, and then includes those duty charges that they've paid on your behalf, you've already collected the money from your buyer. But essentially, shipments delayed in customs, we're solving that. We're minimizing those supply chain costs. We're accurately calculating those duties and taxes using what we call just harmonized tariff codes, country-specific imports customs rules that get associated to the product so that we can calculate the duty accordingly. We're minimizing that poor user experience, similar to that example I just used. And also customers rejecting shipments like I would have done for $100 of duty for a $25 pair of sunglasses. Now, is selling internationally worth the effort? It absolutely is. Like I mentioned earlier, right? Avalara customers report selling in at least 2 countries. That's 80% of our customers. 95% of consumers are outside of the US. So absolutely, if your business dictates that that's a marketplace, that's really obviously worth going after. And 97% of these sellers are small businesses, right? And so, yeah, we're prepared to kind of give them that assistance. Now, to kind of begin to wrap this all up, we're prepared to help you through the life cycle is really what this slide is, right? Whether it's identifying the tax footprint and then the registrations, the tax determination, any necessary e-invoicing and customs and duties specifications, then also the returns and reporting, whether those returns are domestic or global. So in a nutshell, the full Avalara life cycle. We have one more poll question left and we have 2 minutes.
Perfect timing. Yes. Here's our 4th poll question. So what was your favorite learning from today? You can go ahead and answer that. You'll need to type in a response. So let us know which of the topics today you found most interesting, or let us know what you'd like to hear more of in the future. Or if you just attended because you wanted the CPE credit, that's okay too. We also had someone comment on how beautiful Aaron's virtual background is, which I agree. I would live there. So let us know and hit submit for that final CPE poll question. And we did get a lot of audience questions today. A lot of them were focused around exemptions. So I picked out a couple related to exemption certificates. So this question was asked by Sarah and Rosie, and they asked, will Avalara validate certificates for me?
Yes.
Okay.
That answer is yes. The longer answer would be, we offer managed services to validate our customer certificates. We offer managed services to collect certificates on behalf of our customers from their buyers as well. And others, but yeah, absolutely.
Perfect. And then we also had some questions. This comes up every time we talk about exemption certificate management or ECM. If we have any information on the migration from cert capture over to ECM.
Yes, I'm going to speak very vaguely though. So it's my understanding at this point that complete migration would be done probably by end of fiscal year 2023. We've recently released ECM Premium, which is kind of that top tier, similar to what cert capture is. And there's a roadmap for some of the last remaining deliverables that, if my memory serves correct, look like they're going to be delivered this year. So absolutely.
Okay. Perfect. And unfortunately, I think that is all the time that we have for questions. And I just have a few things to wrap up. So Aaron, thank you so much for your time today. This was a lot of content and you flew through it. So we really appreciate your time.
You guys have a beautiful day.
So to close out, if you qualified for a CPE credit, you can download your certificate now in the CPE certificate engagement tool. Your certificate will also be available in the post-event email that you'll receive later today. In that post-event email, you'll also include a link back to this console where you can view the on-demand recording, you can get the slide deck and the additional resources. I'd like to highlight our upcoming Avalara webinars. So tomorrow on May 17th, we have e-invoicing in the US. So if this last section on international sales and taxation was interesting to you, you might find that webinar worth your time. We also have on May 23rd, the 2023 State of Beverage Alcohol Compliance. So be sure to check out those webinars and more at avalara.com/webinars. I'd also like to briefly mention that Crush Regional events. So Crush Regional are events for Avalara customers, and they provide you the opportunity to learn, network with your peers. We have sessions, CPE, lots of food. You can book one-on-one appointments with your customer success manager, support your account manager. So lots of opportunities to interact with Avalara. We are having 8 stops throughout the US. Next up, we have Atlanta, which is next week. Aaron and I will both be at that. And then following that, we have Boston on June 20th, London, June 27th, Chicago, August 15th, and then we'll be in the West Coast later in the year. So thank you all again for attending today's webinar, and this concludes the event.